So my first trade is going to be on June 23rd. This was a pre-market open short-term long at a high probability area. You know that my style of trading is for me to attach my Fibonacci extensions from major swing highs, which then start a major move, in this case a bearish distribution, right? So in this case, for the major swing move which started this bearish distribution would be previous daily high, right? You can see my Fibonacci extension attached right here from the swing high to the first major swing low, which broke the opposite structure. If you need a guide on how to attach Fib extensions, they are found on my X. This is not what this video is about. But now, am I really going to have three Fibonacci extensions attached to the major swing highs from which a major move started? In this case, it would have to be, first, we already have previous daily high. Second would be Asia high. And then third would be London high. Me personally, something that I came to realize this week is that I don't really need all that noise. The only thing I'm going to focus on is the current developing wave. So in this case would be from the last major swing high from which the major move started, which is this wave, which is currently developing. So I attach my Fib in there. Okay, as you can see, I have both my Fib extensions and my standard deviation. The standard deviation, before you get confused on what this is, the last series of candles that got broken by this structure. In this case, from the candle wick to the candle body. Okay, now these projections, once again, they are projections. They are anticipations where I could possibly expect the market to extend to, have a reaction to then continue going into the opposite direction. In other words, a reversal, or continue going lower afterwards. Okay, these are the two different ways that you can trade this this logic, and I'll show you on today's trade exactly that. And I believe that I took different trades like that, but let's not get confused on the context. Okay, focus on that overall idea right now. Now my job is going to be to align the red levels that you see on the Fib extensions and the standard deviation with other liquidity levels. In this case, or me personally, I like to align them with liquidity sweeps, S&Ts, and fair value gaps. Okay, in this case, I know that the higher time frame fair value gap, in this case the 4 hour, it's all the way down here. Also, keep in mind the overall market maker model. This is a sell model. Okay, why? Look, we swept this buy side right here, and then we have been distributing lower, respecting bearish narratives. In this case, a 4 hour bearish, 4 hour bearish, 4 hour bearish, right? We're just selling off. Where's my if bearish? Where's my draw on liquidity? We have just swept previous week low. My next major liquidity pivot point is right here. So even if, keeping in mind the logic of, okay, could I expect a temporary bounce, say from here to here, or perhaps we're not even going to reach for that sell side. Instead, from this level, we're going to continue going higher and then fully reverse now. Maybe that's a possibility. Me personally, looking at the 15-minute, this area to me looks like a accumulation. In other words, a consolidation. The market is accumulating orders, which is perfect. What I would like to see is this right here. Let me show you the narrative that I'm thinking of, that I was thinking of at the time. Sideways consolidation looks like this, right? If we want to go higher, it makes sense to first sweep the sell side liquidity and then reverse bullish, right? That's the overall narrative in a bullish market maker model. This is the exact narrative that I was planning for at this time. So now that we have the narrative aligned with, perhaps the possibility of this being the full reversal, or even if it's not a full reversal, maybe from this pivot point, which is a major swing high from which, once again, the major move started, Maybe we want to retrace to equilibrium of that range and then continue going lower. So we reverse bullish from here, but in reality it was a fake out. It was a fake bullish move. We're just retracing bullish, take out late shorts, and then continue going into this sell side liquidity. Either way, both moves that I have anticipated mathematically make sense in terms of market maker models. So now that I have that narrative aligned, let me pull the 15-minute. So what's currently at play for me? We know that we are inside my golden pockets right here. We have a 15-minute fair value gap right here. That's my SMT. Normally, you would want to trade the stronger asset. What do I mean by a stronger asset? The one that has a higher low. Nasdaq has a lower low. Me personally, I'm just more familiar with the way Nasdaq delivers price action. Therefore, even though this is my rule of thumb, to trade the stronger asset, which by the way would have given me way better risk to reward, I was okay with trading the Nasdaq. However, once again, I missed my entry. Normally my entry, it would consist of, as soon as I see, let me go step by step, okay? SMT. Now the only thing I want to see is a divergence in the candles. In this case, I didn't have it. Why is that? What I mean by divergence in the candles is one candle has higher low and the other asset has a lower low. That's an internal SMT on top of the higher time frame SMT. The algorithm telling me that it is in fact creating divergences between assets, and these are the crumbs it leaves behind as a sign. Okay. So, and then on top of that, if there's a bearish fair value gap right here, which I could anticipate that is going to get invalidated, the only thing that I'm waiting for at this time would be a change in the state of delivery, really aggressive. Normally, this is what I like to see, a bullish candle engulfing the opposite candle. Okay, once I see that, that's where I'll take my entry. A stop loss goes at the protected low. And where's my target? Nearest opposite liquidity. But this is not exactly the entry that I took. I took the exact same trade. However, this is what I waited for. Okay, I already missed this entry, and that's fine. I wanted to move higher. I wanted to come lower, like this. Revisit the IFPG, or just the change in the state of delivery area, and then continue going higher, tapping into the inversion. So this is the inversion, remember, IFPG. And then the wicks getting bought up. What do I mean by getting bought up? Somebody tried to push them down, and then somebody immediately bought them. That's why they look like this. So to me, that was a sign that the buyers were winning. I was confident on the high probability area because, once again, all the other confluences that I have already mentioned to you. Stop loss goes right there. Where's my target? My target, once again, nearest opposite liquidity. I could either take partials right here or just target this full range, you know. But I have to be aware of my initial probability play. The full bullish reversal, or this could be a short-term bullish reversal. We reach for equilibrium and then we continue going lower, considering that we want to reach for this sell side liquidity. Either way, both moves would make sense. In order for me to protect myself against invalidation, I'm going to go ahead and in fact trade the equilibrium logic. I took my entry right there, and then I let it play out. Temporary retest, more than fine to do that. I was confident on holding these. Once I saw a good enough amount of profit, that's when you want to start trailing your stop loss. Whether that is $300, $200, $400, I promise you, even though it might look small, depending on your size position, it is better to secure profit than to just secure nothing and break even, or just to take the full loss because you decided not to trail your stops. So at this time, I trailed my stops, let it play out, and then boom, I got stopped for full profit. I think I trailed stops too aggressively on this example. I was able to secure more on my live trade. I secured 2,400 on that, but it's the same exact narrative. Now you might say, let's continue to see how it goes. Imagine, normally I do get stopped out just for the move to continue going into my direction, and that's fine. Would you rather secure $1,900 or risk a break even? You waited, let me see, I took my entry right here. Would you have rather secure 1900 or wait an hour just to secure nothing and break even? So this is the trade that I took on June 24th, I believe it was. Yes, I almost said 23rd. Anyway, so we'll start off on the 15-minute just for market maker model analysis. So where's my draw on liquidity on this current range? If you set these right here, then you're correct. That's your current draw on liquidity. What levels are these? By the way, this is the same sell side as yesterday. As you can see, we haven't hit it. We have been consolidating ever since. Fine. I have a 4-hour, the same 4-hour, a 15-minute, and a 15-minute. Okay? So, if bullish, would it make sense to once again do the same thing that I told you yesterday? Come down here, have some type of S&T between either the externals or the internals, and then continue going bullish. I'm going to mark the areas which the market likes to revisit. In this case, we have a 15-minute change in the state of delivery right here. So 15-minute change in the state of delivery is marked out. We also have a 15-minute invalidation right there. Me personally, I don't like to look for that, but I'm always aware of it. Okay, I don't like to dry or mark it. My indicator already does that for me, but it's just something that, if I see it, then I know that it's there. Okay, let's go back to the 1 minute. We already have that mapped out. Then on top of that, let's also mark this 1 minute changing the state of delivery area in case the market does want to revisit that. So 1 minute changing the state of delivery. So I have everything I need for that probability. I have the first 15-minute changing the state, and then I have the 1 minute changing the state of delivery. Once again, I want to watch for algorithmic reactions. Whatever the major low ends up being in here, that's where I'm going to anchor my equilibrium, my opposite equilibrium of this current range. From this, in this case, major swing high is this to the current peak low. If a new low is formed, then I'll reattach it there. Right now, this is what I'm working with. Would it make sense to revisit this 15-minute fair value gap, have some form of S&T at the highs, and then continue going lower? Yes, it would make sense. And I want to see that S&T with the 8 o'clock model. Now let's see what happens. And then look, within reverse bullish. By the way, we're having a reaction right here at the golden pocket. However, I'm not interested in trading that. That's where I took my entry. Why? ES swept 8 o'clock buy side liquidity. S&T with ES, but it's with Nasdaq. I just have the presets like that. Nasdaq reaches back into a 1 minute change in the state of delivery. Golden pocket of equilibrium. I never reattached my equilibrium. Here you go. Golden pocket of equilibrium. This red rectangle that you see right here is a 15-minute fair value gap. And then on top of that, we have an internal S&T. Why is that? Look at the divergence in candles right here. Sell. In this case, because this is the weaker asset, Nasdaq, this is more than fine for me because I prefer to trade Nasdaq. So we trade the weaker asset on a short narrative. A stop loss goes at the protected high. Where's my what's my target? nearest opposite liquidity. Where is nearest opposite liquidity? It's right here. You might say, oh, that's just a 2.5 hour. Okay, so what? I like to see that. I like to see that even more. Right there, I'll try my stops right here. And that's me being not as aggressive. Normally, they would be right here at this pivot point. And then boom, full profit right there. Drawing liquidity has been taken. Golden pockets of my Fibonacci have been taken. All of these have been reached for. Even level 6.5, yep. That's a high probability area. Let me erase all this noise so that you don't get confused by it. Now what else am I looking for at this time? Is there an internal SMT? No, all this area is trading equally. Am I going to take a long position from there? Yes. And I'll tell you why. There is no 1 minute invalidation, but there is a 1 minute change in the state. Oops. There you go. 1 minute change in the state. $5,000. I'll trade my stops right here at this swing low. I got stop for profit. These are the setups you want to trade or you want to focus on. These are high probability areas. Once you understand these, once you understand the narrative, the market making models that need to play out, the different directions that the market potentially could play out to and from, then you can start trading the way that I traded this short setup. Because I knew that at this time, I wanted to see a reaction towards these levels. I knew that the draw on liquidity on a 15-minute consolidation was down here. So I took the bullish trap right here, which is this is a bullish trap. I took my short right there towards this liquidity, which aligned with the narrative of reaching towards these levels. And as you can see, high probability area. You don't want to get greedy on, oh yeah, I'm going to target a 4.0 or a 5 hour. No. You always trade, you always exit at nearest opposite liquidity. Now let's see how this played out. You know, we already got stop for profit. There you go. You would have gotten full profit right there. And to get into the last trade of the week, we're going to get into the context behind the market maker model in order for you to understand my actual entry and the logic behind it. So in the morning, I saw these. However, I completely ignored the fact that, you know, we manipulated London low or London high, sorry, and then we were going to distribute, right? I obviously understood these massive draw on liquidity. However, I didn't think that we were going to sell off this massively, okay? So there was not enough context behind shorts in order for me to actually just ride the trend, right? So I was expecting a small bullish retracement to then continue going lower towards PDL. However, that did not happen. For those that were on my live stream when I took this trade, you know that what I was waiting for was some form of SMT at these highs. I was going to trade the weaker asset. In this case, was going to be Nasdaq. And then at this, after we invalidated this bullish fair value gap, then I took my short. My stop loss was at the protected high, and then my target was obviously nearest opposite liquidity, with potentially letting it ride towards PDL, right? Unfortunately, as you can see, that did not happen. And why is this important for you to know? Because the psychology part behind wanting this move to be right. What you need to understand, let me hide this part of my indicator, is that most of you perhaps would have struggled and every single afterwards at every single SMT that you would have seen, such as, you know, maybe there was an SMT here, maybe there was an SMT here, and as you can see, there's a lot of bearish narrative going on, right? And the 930 sell-off It was really hard for me to tell whether that was a distribution or that was the manipulation to then continue going higher. By the way, keep in mind that at this time we also had an SMT at PDL. That level was way too close in points to this level for me to be confident that this SMT was going to hold. Okay, so that's why I was expecting the market to go lower. What I needed to understand is that, or what I needed to remind myself was the mistakes that I had made previously trading this exact same way, wanting to just be right about the move and then be done for the day instead of remaining patient and actually trade the high probability setup. At this, you see this bullish fair value gap getting validated. Perhaps you would have taken another entry in there and then target the same thing, you would have gotten stopped out again, so on and so on, right? So, because the overall move for 9:30 was unclear to me, I thought to myself, okay, what time is it? It's 10 o'clock. So I started thinking to myself in terms of 30 minutes and 1 hour time frames, or time gaps and time macros. So I figured I would just draw or imagine that the 10 o'clock was going to accumulate. So if 10 o'clock is accumulating, then 9:30 had to be the bearish distribution. Therefore, I could expect these to be a small reversal. Therefore, a smaller time frame market maker models are going to play out on this overall higher time frame market maker model of perhaps continuing in a bullish consolidation rather than going anywhere, or just expect the market to consolidate sideways and then continue going lower, right? Either way, once again, I'm tracking both sides of the market. However, what was I looking at right here? I could clearly see these low resistance liquidity being generated. So at this time I thought, okay, maybe the market would like to sweep that sell side liquidity. Also reach for equilibrium once again, from the major swing low, which started this sideways bullish accumulation or consolidation, same difference. Come back in here, the peak high is yet to be determined. We don't know if that's it, right? And then continue going higher, right? Perhaps, maybe. That's a possibility. That's the highest possibility I was open to. So me looking at all of these, by the way, low resistance liquidity, why was I able to tell that this was low resistance liquidity? In a bullish narrative, the market literally likes to do these right here. Not go anywhere, just consolidate sideways and leave a trend line like this. That's low resistance liquidity. Same thing for a bearish narrative. The market likes to do these. Consolidate in a bearish narrative, not go anywhere, and generate low resistance liquidity. In this case, buy side liquidity, sell side liquidity. So when could I actually expect this move to happen? Clearly 10 o'clock is accumulating. So I was expecting, and I called this out on my live stream. You can go ask anybody who was watching my live stream. I told you guys at 11 o'clock I want to see the manipulation happen. And then I want to see 11 o'clock also distribute towards this low resistance liquidity. So I didn't take any more trades around this area. I was patient until 11. So let's go ahead and move forward to 11. It's going to be, let me see, 57 minutes, perfect. At this time, I was hesitant because it was near 11 already. At this time, it was 10:58, And then I saw clearly, let me mark it out for you in case it's a little confusing for you. Right here, we have the accumulation, right? These right here clearly is manipulating. Now I'm expecting a distribution towards these levels. Perhaps this level as well, perhaps this level as well, right? Either way, I'm open to just grabbing this sell side liquidity because I'm satisfied with that. The range that I'm working with, I'll explain that to you here in a little bit. But I was hesitant. I was patient. Okay, clearly we have an IFBG right here, and same exact entries that I've been showing you on this specific model is going to play out. So right here, I didn't chase this move. Why? Because if I did, if I took a short right here, then my risk to reward is just not there. It's small, and I would have been satisfied with that, but it just didn't make sense risking this much just to make this much. So I decided to be patient. I decided to do what? Once again, I live streamed this. I can't recall if I recorded it. If I did, I'll put it up on the screen. I think I did actually. So what I did was I want to see a retrace back into equilibrium, see if any asset sweeps this buy side, and see if we cause any form of SMT at this high, and then I'll trade the weaker asset. Hopefully, I was hoping the Nasdaq would be the weaker asset because once again, I prefer Nasdaq because I am more familiar with the way Nasdaq delivers price. So that's what I was expecting: a weaker asset, an internal sweep at 11 o'clock. So right now I was patient, and I don't know if I got to the equilibrium part. The low for this range is yet to be determined, but what I would wait for or want to see is the weaker asset to trade back into equilibrium, reclaim this IFVG, and then continue going lower afterwards. And then I would take my entry somewhere around this area right here at the equilibrium points, and then target low resistance liquidity. That's a better risk to reward ratio rather than entering right here, as you can see. So that's what I was waiting for. So I was patient. I didn't chase this move. That to me looked like the peak low, right? So once again, we draw our equilibrium. And if this low gets broken, then we just readjust our equilibrium, okay? No problem at all. All that we're doing is calculating this range that we are currently working with. Nothing else matters to us right now. We already know accumulation, manipulation, distribution. Now we just need the mechanicals to validate that narrative, and obviously price action to also validate our idea. What do I always tell you? Price action is going to validate your idea. If price action does not validate it, then you're wrong, okay? So I was patient at this time. Once I saw this move, this bullish candle, I wanted to see a really massive bearish candle or a sell-off. So right here, I was confident enough for actually take my entry. Why is that? Because ES, let me see if I can pull it up. This was on the 25th. It was around what time? It was at 11. It was right here. Let me see where I am. Right here. ES was the weaker asset. Why is that? This bullish fair value gap that you see right here was invalidated. Or sorry, not this bullish. This bearish fair value gap that you see right here was invalidated by Nasdaq. You can see this bullish candle closed above it and then respected the other bearish candle that's literally right here. And ES, it respected both of them. It respected the one that Nasdaq invalidated, and Nasdaq is like up here and ES is way down here. So ES was the weaker asset. Once again, I prefer NASDAQ price action because I am more familiar with NASDAQ. So right here, I was confident enough for me to take my short. Took a sell right here. I put my stop at the protected high once again. And what was my target? My target was obviously this sell side. I was okay with just taking full profit right there. But if this is the accumulation, manipulation, distribution, not towards only here, but towards PDL, then that would have been my actual target. That's a big as a win. And once again, that's what I wanted to touch on. Look at the range that we are currently working with. That's why on just one candle, you know, I'm losing around $3,000 on 2 minis, and then I'm making 16,000, you know, on just, let me see how many points that is. Oh, that's not the right tool. Excuse me. On just 400 points. So you have to be able to adapt to what you are working with, once again. So I let this play out. Fine, I'm recording now. Fuck me. I got stopped out on the live account. That's perfect. Beautiful trade on the live. Beautiful trade on these as well. Beautiful entry. Maximizing profit. Sell side has been swept. I want to see a strong sell-off. 30-minute power of 3. What did I tell you? 11 o'clock was going to present us with the setup. I would love for it to continue, bro. I really would. Like into this area right here. That's fine. Once again, the importance of knowing when to trail your stop. Why is that? Because let's say right here, you would have moved your stops at break even only. That's where your stop loss is at. You would have secured nothing. What happens afterwards? Let me mark it out for you. Accumulation. I want to see this area get swept. And maybe that's it. Manipulation. Distribution, question mark. Market maker model inside of market maker model. My overall narrative that I was expecting right here was right. It's just the market needed to develop longer to then continue the actual move that I was expecting. That is it for this week. Once again, I post all my trades on my X. Go ahead and give me a follow on that. You're more than welcome to join my free Discord community. I go live whenever I feel like it, to be honest with you. The end of the day is free knowledge that I'm sharing with you guys, free lessons. I really hope that you enjoyed this video. If any part of this video you got lost, go ahead and rewatch it and take notes. Have a safe weekend. Much love.